A few Tesla bulls have expressed high hopes for the manufacturer, saying Tesla will offer a return 10 times or more higher than its current stock price by 2030. Tesla is ranked 26th on the list of the 30 most popular stocks among hedge funds at the end of 2030, Q4 2021. Tesla was in 91 hedge funds' portfolios, up from 60 a year earlier, and in the last 3 months, Tesla returned 4.51%. Why do analysts believe such huge returns on Tesla will occur in the future? Keep watching to find out. Tesla is a $1 trillion electric vehicle company and sustainable energy company headquartered in Austin, Texas. Year to date, Tesla has returned 6.79% with a 12-month return of 33.32% to begin with. Shares of the electric vehicle leader rose slightly as the market anticipated earnings updates for both the previous and subsequent quarters. However, long-term goals are the most attractive to investors, according to several famous proponents. Tesla should easily grow to justify its high multiple, according to a recent study by Texas-based hedge fund Warm Capital, and will eventually dominate the S&P 500. Warm Capital recently issued its investor letter for the first quarter of 2022. The fund beat its benchmark. Total, the S&P 500 returned 25.64% points in the first quarter of this year, but it's been a year now. The performance is still 18.12% compared to its benchmark, 4.59% during the same period. As a result, hedge fund research director Eric Markowitz and research analyst Cameron Tierney believe the current stock price hovering around $1,000 is still a great deal because much higher returns will be seen by 2030. According to the newspaper, Tesla's diverse business lines, broad scale, growing profit profile, groundbreaking revolution in real-world AI complex manufacturing approach, suite of vertical integration software, and much more are consistently undervalued by traditional Wall Street research. In a note to investors, the company said, according to our years-long investigation of Tesla's production capabilities and supply chain communications, Tesla is more than 6 years ahead of the competition, and its advantage is growing. In its Q1 2022 investor letter, Warm Capital had a lot to say about Tesla. According to Tesla, its majority share has been gradually bullish over the past few months. They expanded their Tesla holdings in the first quarter as a sign of their growing confidence. Broadly speaking, they believe Tesla is on track to outperform the S&P 500. They assert that Tesla has at least another 10 years of development ahead of it. It has now reached its inflection point of exponential and rapid growth, similar to how Amazon emerged from the Nasdaq bubble and financial crisis. At the same time, the prevailing growth expectations for Tesla, in their opinion, are too low. This dynamic will eventually lead to continued upward expectations, triggering revisions that lead to one of the most dramatic arbitrage investment opportunities many investors have ever seen. The team explained that major shifts in industry models are generally the hardest on existing companies and startups that suffer from a lack of funding. Tesla, on the other hand, is said to be in the Goldilocks zone, which should push it to the forefront of the electric vehicle revolution. The team concluded that we expect Tesla shares to deliver a tenfold return by 2030 and perhaps much more. Tesla has long been a hedge fund's top spot, so this isn't the first time it has taken a bullish stance on the stock. It's worth noting that the company's ambitious aspirations, such as the $1,000 target for this stock, which was mentioned in Seeking Alpha 4 years ago, have been met. Tesla's first bullish outlook is rivaled only by Uber bull Cathie Wood of ARK Invest, who raised her price target to $4,600 by 2026. In the bullish case, Wood's team has set a price target of $5,800 per share in just 4 years. According to ARK analyst Tasha Kenny, Tesla shares will trade like a mature company rather than a high-growth one in 2026. Beating the model's current assumptions through 2027 results in a much higher price target and compound annual return rate. To learn more about this, watch our previous video where we went into detail. To be fair, both positive forecasts are based on businesses that Tesla does not currently operate. According to ARK Research, The prospective robotaxi business line is a critical driver, contributing 60% of estimated value and more than half of expected EBITDA in 2026. It was rumored that this company had already raised $1 million. Warm Capital's predictions include a positive outlook on the Tesla truck and hints at artificial intelligence and the Tesla bot. A semi-similar robotaxi has been promised by 2020, and like the robotaxi, it has yet to see the light of day. Meanwhile, the Tesla robot was depicted on stage as an actor dancing on stage. Tesla tech-nuking Elon Musk. Previously predicting that the prototype would be completed in 2022, the date was recently pushed back to 2023. It is unclear whether analysts' positive long-term goals are reasonable or whether a healthy dose of skepticism is necessary. Tesla has achieved significant growth in the manufacturing of its electric vehicles over the past 3 years. 936,000 vehicles were supplied to customers in 2021, up from 500,000 in 2020 and 368,000 in 2019. The strong revenue growth and operating leverage resulted from increased deliveries. Tesla generated $53.8 billion in revenue in 2021, up 71% from the previous year, and net income of $5.5 billion in its first year of big profits, making its long-term prospects look very promising. Tesla's net income of $5.5 billion represents a profit margin of 10.2%, which should grow if it can maintain electric vehicle manufacturing volume while controlling supply chain expenses. Tesla's rapid expansion is also expected to continue. Analysts' average revenue forecast in 2023 is $106 billion, roughly double what it is now. Should you invest in Tesla? Tesla could be a strong buy now if you believe the company can tenfold its annual deliveries, or more than tenfold its annual net profit, and figure out its energy and full self-driving businesses. This, in our opinion, is a difficult process and adds a significant amount of risk to the investment. Now let's get out our crystal ball and make some educated predictions to find out where Tesla stands today. Assuming Musk's second major plan comes to fruition, we should expect to see the energy business ramp up as a vehicle for every segment of the market, with customers driving themselves entirely and making money from their Tesla goods. Many more giant factories are needed to realize these ambitions. Fortunately, factory costs are steadily decreasing, and construction and equipping only takes about a year at present, so we can safely expect at least 10 additional giant factories in the next 10 years. Musk aims to increase current production from his massive factories by about 50 times, so it will likely be more with improved production procedures. Future profit margins on car sales should continue to rise significantly, as the driver no longer has to pay attention to the road with this huge, beautiful screen in front of them. Even software like spreads looks possible once full self-driving is launched from the costs of robots, automatic bidding fees, and an in-car app store for entertainment purposes. And Tesla's competitors, we believe, have started working actively, perhaps too late. Take Volkswagen, for example. Earlier this year in March, Volkswagen Group said it would invest $7.1 billion in North America to build battery electric vehicles, with 25 new EV models available to customers in the US, Mexico, and Canada by 2030. By the beginning of the next decade, it wants 55% of its cars to be electric. While VW is taking electric cars seriously, many other automakers are still napping, and VW is a little late in catching up to Tesla. Yes, they have more money and people to deal with the problem. However, this adage applies to technology. Tesla has a head start of a few years, which can't be undone once money is spent on it. So, once the sleeping giants realize they're too late to the party and won't be able to catch up in time, they'll likely want to license Tesla's battery, powertrain, and self-driving technologies. Tesla only recently started construction of its own battery production line and R&D lab, but it has already built a battery that will only degrade 10% after 1,000,000 miles, after which it may continue to be used in grid storage solutions until it's used up. Recycled. It also appears that Musk expects Tesla's energy sector to be equivalent in size to the company's automotive division by 2030. We believe all of this will lead to a full return of 10 by 2030. We believe the brand will thrive, and so will you. Its stock. Where do you see Tesla in 2030? Comment your predictions below.